Hey everyone, welcome back to Corporate Decoder, the place where we decode the wild world of corporate finance. And today we're diving deep into DIODES Incorporated recent quarterly filing. Oh boy, do we have some interesting numbers to unpack that might just reveal the hidden story behind their performance. Alright, DIODES Inc. is a company that designs and sells semiconductor products for various industries like automotive, consumer, electronics, and communications. Basically the little chips that make our gadgets and cars work. This report is a 10Q, a quarterly update on how the company is doing financially. So it's like a snapshot of their recent business activities. The period we're looking at is up to June 30th this year. Consolidated balance sheets coinjordated chums in thousands except share and per share data Stein use as are stumped straight into the financials. Their balance sheet as of June 30th, 2025 shows us what they own and what they owe. Total assets are around $2.47 billion. That's a decent chunk of change. And their liabilities total a bit over $537 million. That means they have more assets than debts, which is generally a good sign. Now, for what the owners have in the company, which is called stockholders' equity, it stands at a healthy $1.93 billion. Kurgan consolidated statements of operations gesaudited Chevens. In thousands except per share darts to moving on to their income statement that shows how much money they made and how much it cost to make it. For the 3 months ending June 30th, 2025, net sales were $366.2 million. That's a solid increase of over 14% compared to the same time last year. Gross profit, which is what's left after paying for the costs directly related to making their products, was $115.3 million. That's up about 7% from last year. However, their gross profit margin dipped slightly to 31.5% from 33.6% last year. This means that for every dollar of sales, they kept a little less profit. This is because of lower market prices and not using their factories at full capacity. It's like if you sell more cookies but have to lower the price a bit so your profit per cookie goes down, even though your total profit might go up. And the bottom line, their net income for the quarter was $46.1 million. That's a huge jump from just $8 million in the same quarter last year. This translates to earnings per share of 99 cents, up from just 17 cents last year. So for every share of stock you own, you earned a lot more this quarter. Cogents deconsolidated statements of comprehensive income disaudited twain in thousands to start. Now let's look at comprehensive income, which includes things not directly on the income statement, like changes in the value of investments and foreign currency. Their comprehensive income was $85.7 million. This figure is boosted by a significant unrealized gain on investments worth almost $30 million. This looks like a positive mark-to-market adjustment on some of their investments and a $13.7 million gain from selling a subsidiary. Cotton's deconsolidated statements of equity. Tudgen audited Dougherty. In thousands to Chris, the statement of equity shows how the owner's stake in the company has changed. We see here they issued some new shares for their employee stock plans, increasing their common stock value slightly. They also bought back some of their own stock, which reduces the number of shares out there and can be good for shareholders if the price is right. Deconsolidated statements of cash flows. Sums audited TEF flows. Kept unaudited TEJ. Major inflows and sticks cash flow statements are crucial. They tell us where the cash is coming from and where it's going. Remember, cash is king. For the first 6 months of 2025, DIODES generated a positive $98.2 million from their normal business operations. This is a big improvement from a negative $16.7 million in the same period last year. That's a massive swing, meaning they're bringing in a lot more cash from just running the business. In investing activities, though, they spent $78.6 million. This was mainly on buying new property, plant, and equipment, which is good for future growth, and also on some equity investments, including buying a stake in ATX Semiconductor and increasing their investment in Atlas. They also sold a subsidiary for about $16 million, offsetting some of these expenses. Financing activities used up $30.1 million. This includes buying back stock and changes related to non-controlling interests, meaning ownership stakes held by others in parts of the company, Looking at the quarterly numbers specifically, the company generated 41.5 million in cash from operations. This is a big improvement over the same period last year. Overall, they have a healthy amount of cash and investments at $327.3 million and still have access to a significant credit line of $225 million. This means they have plenty of flexibility to manage their business. Now let's touch on some related party transactions. We see here a significant amount of accounts payable with Keylink, a partner in their Shanghai facilities. This is normal business stuff. They also purchase materials from Nuvoton, where a board member also sits on the board of Nuvoton. This is a common practice for companies to do business with entities where they have board representation, but it's good to keep an eye on these relationships to ensure they remain fair and transparent. One particularly interesting item is their investment in Atlas, an unconsolidated variable interest entity, or VII. They own more than 50% of Atlas, but due to certain agreements, they don't control it, so they don't include its assets and liabilities in their own financial statements. They've put in a significant amount of money, more than $99 million in total exposure to this company. They also recently entered into a joint venture with Global Advanced Packaging Test Limited to acquire a 43% interest in ATX Semiconductor. This shows they are actively looking for strategic partnerships to enhance their capabilities. A notable event was the sale of their stake in TF Semiconductor Solutions for $13.7 million. This divestiture helped boost their income for the quarter. So what's my take on all this? DIODES Inc. is showing some very positive signs. Their revenue is up significantly and their net income has skyrocketed compared to last year. This is driven by strong demand, especially in Asia, and a recovering market. As a result, their cash flow from operations is much healthier, which is a great indicator of business health. However, there are a couple of things to watch. Their gross profit margin has slightly decreased, which is a bit concerning given the increased sales. It means competition or cost pressures are impacting their profitability per unit. They need to manage these factory utilization and pricing challenges carefully. Their investments in companies like Atlas and ATX show a forward-looking strategy, but also add some risk, especially with Atlas, where the financial details are a bit complex due to the VIE structure. Overall, DIODES Inc. seems to be on an upward trajectory with strong sales and improved profitability. The slight dip in gross margin is a point of attention, but the overall financial health and improved cash generation are very encouraging. They are clearly navigating the semiconductor market effectively by expanding their reach and diversifying their investments. What do you all think about DIODES Inc.'s performance and their strategic investments? Let us know your insights in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate deep dives into financial reports. And don't forget to join our Discord community for even more discussions and insights. The link is in the description below. Thanks for tuning in to Corporate Decoder, and we'll see you in the next one.